Another form of inflation is coming from rising rents, and that's sticky, hard to remove as the population rises fast and as building costs have accelerated. Building approvals are at decade lows, and even the Reserve Bank governor this week suggested more people might just have to move in together to get a roof over their heads. But despite the rising rates, 11 of them so far, home prices in May have kept on rising. Cameron Kusher is Executive Manager of Economic Research at REA Group and joins me now. Cameron, always good to chat to you. This is the conundrum, isn't it? Inflation continues to rise, rents are rising, interest rates are rising, but home prices right now are starting to rise as well.
Yeah, it's a real conundrum for the Reserve Bank, Ross, as you said in the opener there. Now, rents have been rising in terms of advertised rents for a good couple of years now. It's now starting to show up more and more in the CPI, though, as well. And he did hint, Phil Lowe hinted this week that CPI could see rent increases of up to or maybe even in excess of 10%. So clearly that's very inflationary. And as you said, we're now also starting to see, as well as those rental increases, prices nudging higher on the back of very low supply and a rebound in demand for properties.
OK, so the supply side of this is not going to change anytime soon. We know that because even the tax commissioner this week said that they're seeing 5 building companies per week going broke, which is phenomenal. But that's taking out the people who otherwise might be building the accommodation that people need.
It's exactly right, and that's again part of the challenge, that right at the point now where we need a lot more housing stock, we're not getting it because firstly, it's too expensive. So for a lot of people, they look at buying a brand new property or an existing property and the brand new property is too expensive. But there's also so much uncertainty about A, whether it will be delivered, but B, when it will be delivered. So, a house maybe used to take 6 months from the time you put the contract on it to get it. Now, a lot of builders are putting down the slabs and not coming back for another 18 months. And you've got those same issues appearing in the higher density market as well. The shortage of labour and materials just means that properties take a lot longer to build, and that lack of certainty is making purchasing brand new properties less desirable. So it's a real catch-22. We need more housing stock, but higher interest rates, labour shortages, material costs are making it less appealing to purchase and to build brand new properties.
A lot of people have talked about zoning and about the fact that government needs to get involved to basically open up land and areas where development can take ahead. Harry Triguboff, we spoke to him a few weeks ago here on the program. He said he's simply not going near New South Wales at the moment because it's too hard and he can't make any money. And that's the bottom line. If developers can't make money out of their projects, they won't build.
Yeah, that's exactly right. And I think one of the challenges as well is, if you remember back to 2017, 2018, there was so much competition for sites that people that were buying these development sites were paying a fortune for them. And now those projects simply don't stack up. I think a lot of people do forget that property development and home building is generally quite a narrow margin business. So higher interest rates, higher costs mean that things that were viable become unviable very quickly. But certainly we do need to look at ways to approve more housing, particularly in inner city areas where there is that amenity, and get those approvals through quicker, because at the moment, the supply is languishing far behind what we need.
And even at a time when banks might be charging 5 up to 6% for mortgages, the reality is that there are many people who are renting who are now doing the calculations and saying with the big rental increases, particularly in the inner city parts of Sydney, Melbourne, Brisbane to a certain extent, they're now making the calculation that it's still worthwhile being in the property markets, buying their own home, because it stacks up. That's adding to the demand side of the equation, isn't it?
It is. I mean, the first home buyer segment of the market's still pretty weak, but I do think the more we see, rents increasing by double digits, people are going to look at getting into their own home, even if it does cost them a little bit more. The fact that they then have that certainty of tenancy, and to be honest, if you look at some of the federal government initiatives you can tap into, you can go into a shared equity model with the federal government. You can get a model where they pay for the lender's mortgage insurance on your property as well. So I think that's going to become more and more attractive. And I would not be surprised at all if over the second half of this year we start to see more first home buyers coming into the market, just because it's a case that the rental market is too difficult and there's way too much uncertainty in that market.
I'll tell you what, it's always great to get your perspective on all these things, Cam. Thank you so much for your time, and we'll talk again very shortly.
Thanks, Ross.